Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
I know, most of the time you think about real estate investing and it's like, there's no way I could do that. Well, today we're talking about how to become a real estate investor with just $500. Not $500,000, $500. That is today's College Investor Audio Show. Welcome. At the onset, real estate investing sounds like an expensive venture costing thousands of dollars in initial investment. In the past, that's what it was. Fortunately, you don't need six figures in the bank to be a real estate investor like right now. It just starts with a solid financial plan. Bingo! So many people who have reached financial independence have done so investing in real estate. In fact, it's one of the most common ways to become a millionaire. This might seem like an impossible achievement if you're only looking at the end result. But by starting out with small steps and making continued forward progress, you can make your way to real estate mogul even if you only have a smaller dollar amount to start with. Today, we're discussing how you can get started in real estate investing without breaking the bank whatsoever, even if you don't have hundreds of thousands of dollars. Here's how to do it. First of all, let's answer the question, why should you consider real estate investing? The biggest reason you should consider this is because of the potential for higher returns compared to other asset classes, such as investing in the stock market. In fact, real estate has had an average annual return of 11.42% since 1970. Not too shabby. And you compare that to the S&P 500, they had an average annual return of 10.31%. Real estate investing offers leverage over assets, control over assets, and a substantial profit if done correctly. You can even invest in real estate while you're still in college. Regardless of when you start, real estate investing is one of the many ways to grow your financial portfolio. But it's important to remember that comparing real estate to stocks is comparing apples to oranges. While there are some similarities, there are many differences that investors need to realize and understand as well. Here's what you need to do to get started. Number one, get educated. The best approach is to learn all you can with the free resources available for your immediate consumption. You need to learn the basics, but you also have to ask the right questions when presented with information. While you may be bombarded with images of expensive real estate investment seminars, that is not a requirement to be successful in real estate investing. You can learn the basics from useful free guides online to get a jump start on the basics. There are plenty of free real estate books, podcasts, free information online is a good place to start too. This place, thecollegeinvestor.com, that's a great place to get some knowledge as well. You can also speak with some other real estate investors that you know. Here are the main types of properties and investments available for real estate investment. Each type of investment has its own nuances that you should understand before you invest. Vacant land, single-family homes, small multifamily properties, large multifamily properties, commercial real estate, of course, mobile homes, notes, paper, mortgages. And once you learn about all those different options that we just went through, you will want to think about the one that fits your budget, time, and requirements. You'll also want to learn how to properly evaluate a neighborhood in order to make the best investment. You may not be familiar with the city or locality where you are investing, so you will definitely want to check out how to evaluate the locality or neighborhood you are investing in to make an informed decision. Number two, set your goals. So after doing that homework, you will have a range of the initial investment you can expect to make in getting started. It's possible to get started with just $1,000 or even less in some circumstances, but you should also have a goal and know yourself. How much risk do you want? How much work do you want to put in? Write down your goal. Next, reverse engineer what you need to do to get to that point. What is the initial investment amount required to get started? Here's number three. Find the cash for your down payment or investment. So at some point, you're going to come to the realization that you have to put away your disposable income so that you can fund your real estate investing dreams. You can do so even if you earn a meager salary, I'm not kidding, or even if you are a starving college student. You can do this. And the important thing is to begin with the end goal in mind, the 30,000-foot view, if you will. You can raise funds quickly by working on your side hustle or following your new budget. You got to create one of those. Number 4, explore your real estate investment options. It's important to understand your options, as some have higher risks and higher investment requirements. Traditional real estate investing. So, the first option you have is traditional real estate investing. That involves buying rental properties and renting them out to tenants. Traditional real estate investing is a popular way to grow your wealth, but it also comes with some cons that you should look at before you make that leap. Traditional real estate investing requires searching dozens of listings and visiting several properties before you decide on the right property suitable for rental purposes. And aside from that, you will also spend a considerable amount of time searching for tenants, showing the property to tenants, and staging the home when showing the property to tenants. Maintenance and property management are often overlooked duties that are vital to successful rental real estate investments. If you decide to purchase the home as an owner-occupied home, well, there's an additional risk where you are responsible for a large mortgage loan on the property with a substantial risk in the event of a decline in the housing market. Eek! While these risks are not enough to turn someone off entirely from traditional real estate investments, you do have to know what you're getting yourself into before you make that leap. A newer option to get started down the traditional real estate path is Roofstock. So Roofstock allows you to buy cash-flowing single-family homes across the United States. You can fully purchase your rental properties online, and they have tools to help you manage them as well. Very cool. You can read our Roofstock review and get started as well at thecollegeinvestor.com. Crowd-funded real estate. So if owning and managing your own rental is not very appealing for you, I certainly get it. But you still want to grow your portfolio through real estate investing, crowdfunding real estate investing may be a better option for you. When you participate in this crowd-funded real estate investing, you're actually part of a group of people who pool their money with other investors and then lend or invest that money with experienced rental real estate investment property owners. You stand to profit from the experienced investor's skills with a minimal investment of time with minimal risk too, depending on the investment. One of the benefits of this option is that you can track statistics online to review an investment's earnings history and all the information they have. You can also manage your investment online, and you will get a summary with year-end tax information too. Crowdfunded real estate investing is a very popular option because you do not have to search for property, get a mortgage, screen or manage tenants, or manage the property at all. More importantly, someone else is responsible for property loans. Your risk and workload are minimized exponentially. Yet, the potential for profit still exists. Prior to crowdfunding, private securities could not be marketed publicly under the Securities Act of 1933. As a result, it was difficult to get information about private securities investments unless you associated with wealthy real estate investors who invested in six-figure deals, by the way. Today, though, crowdfunding gives investors access to a variety of investing deals, despite your background, resources, or level of experience at all. While crowdfunding is an attractive option, you do need to research the company and the options to make sure that the company is legit and also a good fit for you. You need to know the minimum investment amount to make sure that the deal will work for you. You will want to know how long they've been in business, as well as their guidelines for borrowers and investors. And lastly, you need to know the fees being charged for their service. So with all that in mind, here are our two favorites right now. Fundrise. They're absolutely one of the largest real estate investment trusts, REIT. You invest with others in a basket of real properties. The great thing about Fundrise is that you get some diversification of deals too, versus simply having all of your money tied up in one deal. Check out Fundrise at thecollegeinvestor.com. Here's another one. Realty Mogul. They are definitely one of the largest crowdfunding companies, and some attractive features too. Well-vetted properties, only 1 out of 1,000 deals meet their criteria, by the way. They also have residential and commercial real estate offerings, $1,000 minimum investment, and REIT offerings designed for passive income and growth. residential and commercial real estate offerings. 1031 exchange opportunities, that's a big deal. You can check out Realty Mogul as well at thecollegeinvestor.com. Now, bottom line, understand the risks of real estate investing. You got to understand this before you make the actual leap. One of the key risks involved is buying a property and having to sell it at a significantly lower price due to market conditions or other conditions outside of your control. Another common mistake includes the timing of purchases and sales. That may result in substantial losses or losing out in a deal or the market picking up ahead of your prediction, forcing you to buy the same product that was available for a bargain at a premium. If you're owning the rental, maintenance and other large expenses can also be a challenge. Also, be aware of the tax implications. So, from the onset, you will want to be aware of tax implications of the real estate investment properties. One of the key determining factors is how the property is classified and how it is used. You don't want to have to part with a major chunk of the returns you earn from an investment as taxes. The one and the only way to ensure this is by understanding the tax implications of any property investment well in advance. An important part of how the property is classified is how the property is treated under rental real estate activities. Go through the existing tax schedules and also get a clear picture about the varying rates that apply. Always speak to a tax professional if you have questions or concerns. Your real estate investment plan in a nutshell. I know real estate can be a lucrative option, but you need to make informed decisions and take consistent action. Use the action guides that we've linked to at thecollegeinvestor.com to fast-track your real estate investment education. But remember, to do your research based on your own unique financial situation to reach your maximum potential in real estate investing. Check it out again at thecollegeinvestor.com. All you have to do is type in the search bar, Become Real Estate Investor, and you'll find it. Thanks so much for stopping by today. Please feel free to share this with somebody else. Maybe you can share it with a friend, and you both can become real estate mogul people. Thank you so much for stopping by, listening again today, and have an awesome day, and we'll talk to you again very soon.